Crude oil opened the week at a high and has seen a sharper crash last week, where we have seen it eroding almost 8 to 9% of its worth in a single week. Biggest fall in the recent times. Does it mean that oil is going to crash below $70 levels, or is it still going to be in the retracement channel? What is going to be our strategy trading crude oil next week and in the month of February? We will see with the help of charts and indicators. This is a weekly review. I do share twice a day update for crude oil, first with the Asia and Europe session and next with the US session. These two updates daily holds an important place where you get a direction of the crude oil. Thus, press the bell icon and subscribe the channel to get the updates. Also, friends, if you appreciate the effort, like, share and comment and do join the channel memberships. With that, let's start first to look into charts and indicators, and towards the end I will give you the strategy for the coming week and for the month of February. First, let's have a look at the monthly chart. See, first of all, if you look at the last two candles, you will find higher lows here and higher highs. Thus, it is very, very important for oil now to break below 72 levels and 71 levels. Yes, this zone is going to play an important role. And let's take a little more question. Let's observe that as long as 70 is not breached, we should not be treating oil as bearish, because see, the month has just started and in couple of trading sessions itself it has erased almost all the gains from the preceding month, and it has come to the same levels. Thus, as long as 70-72 zone is respected for crude oil in the month of February, we have to be careful. It could reverse very, very strongly. It could bounce back again sharply. But right now, looking at the bearish momentum, it appears that it is willing to break. Thus, we have to be very careful around this zone here. Now, if you look at the monthly charts, see the drop, the retracement, double bottom levels here, and thus this zone is very, very important for crude oil, how it behaves at around $70 levels, because that will lay the foundation for the coming few weeks. A bounce back from those levels certainly is going to take the prices much higher. Moving averages have started to converge on the monthly charts. That's a bearish sign. The stochastic has hit a bottom, and a possible recovery from the current levels is what I will be looking forward to. The MACD, also look at the MACD, first wave, second wave, and it is almost at bottom, and thus from these levels I look forward to a reversal. And that is why again I am saying 70-72 zone you should watch out for. This could be a greater support zone for crude oil, and a reversal from here can be strong enough. RSI is looking downwards, certainly a slight bearish sign. Coming to week, on the weekly charts, what has happened? The moving averages crossed over here. Since then, we have seen them trading with divergence and bearishness. Also, if you look at the momentum here, see, first of all, oil consolidated here for a while in this zone. Then the last to last week, it has given a breakout, and then this week it has reversed and erased all the gains. Now, this is important, and it is falling back within this consolidation zone. Any break below this consolidation zone should be a sign of bearishness, and that is why again, also if you notice here, you will find higher lows are beautifully respected here, and that makes 72-71.8 as the first support zone, and then we will look forward to 71 and 70 as the next support zone. If these two levels are taken in the coming week, possibly we are looking forward to a major fall, because first bearish candle and then second red candle, if it appears, it is going to be at least half the size, which can take the prices in fact towards 68 levels here. Be careful here. The direction it is going to take in the coming week is going to be the direction for the next few weeks. Now see, so far also if you look at higher highs, higher lower lows, and the median here is somewhere 75.5 levels. Thus, this is the zone between 75 and 76. It needs to break. Once oil trades above 75-76 zone, you can say now it is turning bullish. Remember, it has to break the median. The median levels, once it breaks, that is 75-76 zone, you can say now it is reversing, and it could give a strong reversal as well. Right now, the moving averages are trading with divergence and bearishness on the weekly charts. In fact, the 20 and 50 period has also crossed over against signs of bearishness. Look at the weekly stochastic. It has seen a rise, now starting to look downwards. But MACD on the weekly, again one must notice, it has formed a triple bottom here. After that, it has seen a rise, retraced. Now, I do expect it to convert, but it is not showing a signs of conversion and a crossover. This coming week is going to be decisive for oil. A recovery from the current levels certainly is a sign of a stronger reversal, and a bounce back from the current levels cannot be denied. Right now, it is not showing much of the signs, but coming week will decide its future for next few weeks. RSI looking downwards, coming to daily. Likewise, on the daily chart, see rise, retracement. Now, this is the channel in which oil is trading, precisely from the highs to the lows or the highs to the lows. Still respecting the channel, remember this fact. It is still respecting the channel. We have seen a bearish week, and yes, we have seen this showing a reversal sign, and since then trading bearish, and it has hit the bottom of the channel. Now, again, I am saying 72 levels you should watch out for, only below which 72 71 zone, below which more bearishness towards 70, and if it breaks 70, certainly you can say that oil is looking forward to a major fall here. Also, now look at the moving averages 20 and 50 period crossing over on the buy side here, trying to converge here and crossover for sell, but it is still not yet crossed over. Thus, current levels in the coming week is going to be decisive, which will decide its direction. Our stochastic has hit an oversold levels here. The MACD, interestingly, on the daily charts has just crossed over. This is the first red candle on the daily charts. This is something which is indicative, though if you look at double bottom levels here, since then a rise, and this is trying to retrace. So yes, a possible reversal from here cannot be denied. RSI looking downwards. But remember, MACD has just crossed over. First red candle. So in the coming week, first trading session and second trading session is where we can see slight bearishness and consolidation phase, where oil prices might try to stabilize in between 69.6 or 72, and from there a reversal is what I will be looking forward to from the midweek onwards, possibly. But yes, it is not a confirm, it is my expectation. Right now, the closing of the week was bearish, and thus we have to watch out more carefully. Now look at the 4 hour. On the 4 hour charts, you can look at 72 71.8, very very good support, and prices have started to retrace. Higher lows are seen. Thus, a bounce back towards the end of the week, towards the last candle, suggests that it could try to start the week on a slight reversal note, where it could try to in fact move towards 73 74 zone, and from there a slight bearishness is what we can look forward to. If you look at the momentum here, drop, retracement, drop, retracement, drop, consolidation, drop, consolidation, or retracement, and the highs here, again, as I said, it has to break beyond 75 76 zone in order to confirm a reversal. Moving averages crossing over here, trading with divergence and bearishness. Stochastic oversold. MACD has seen extreme bearishness here, extreme divergence here. Thus, it should try to converge and reverse from the current levels. RSI is oversold as well. Now we have seen the charts, we have seen the indicators. Time for me to give you the trading levels and strategies so that you can trade profitably and comfortably in the coming week. And before I give you the trading levels, if you want to learn this art of trading, be a part of my 29th mentorship batch starting in a couple of weeks. 28th batch started this week itself. Register yourself now. Also, you can be part of my signals channel, and to be part of it or get more clarification on the mentorship batch, you can write an email to me or ping me on Telegram. My details are mentioned in the channel and video description. Also, you can visit my platform forexfunda.com, where you get the economic calendar, the live charts, and the community. And yes, you also get an option to book a call with me if you need any consultation or guidance. Do visit the platform. Now, let's talk about the levels to buy. See, first, on the upside, the resistances are strong. We can buy at 72.6, wait for it to break beyond 73.2, 73.5 as the first resistance zone. If it breaks beyond this, I will be looking forward to a rise towards 74.1, and after this, direct lending is to 75. Now remember 75, 75.5, and 76. This is the zone where we are going to look at maximum resistance for crude oil. And this is not only applicable for the coming week, but for the month of February. This is the zone where we are looking forward to maximum resistance for crude oil. If it breaks beyond this, this time it is going to break past 80 as well, where we look forward to 80, 82.4, and 84.5 levels. Yes, if it stays above 76, this time stay bullish, it could go closer towards $80 levels, which is going to be a greater resistance as well. On the downside, a selling entry is only below 71.8. below which as well you can look forward to 71.5 and 71. Now this is going to be a stronger support zone for crude oil for the coming week, and below 71 this time we can look forward to 60. Now those 70.5 is the support, but below which you can look forward to this time it is hitting 69.6, and this is going to be the next support zone for crude oil. Very very good support here exists for oil, and below 69.6 we are looking forward to 68 and then 67 levels. Very, see, these are lower levels, but we cannot avoid. I do not expect it to break these levels because this will call for more bears. And 67 levels, 68 levels certainly is a good support zone. We have seen in last few weeks and few months that 67, 65 levels have provided it a good support. But looking at the slump last week, possibility of it to drop exists. However, I will still expect a bounce back. Thus, you need to trade with caution, trade with a stop loss and a trailing stop loss. Like, share, subscribe, and comment. Join my mentorship batch webinar series, and yes, twice a day updates is what will give you micro picture for crude oil on the everyday basis if you are taking or holding a positional trade. Thus, you should watch out the daily videos as well. Press the bell icon, join my free Telegram channel to get the live updates. Do like, share, and comment. Thank you very much. Have a great profitable trading week ahead. Thank you.